Hi, this is Alessio. Hope you're well, and welcome to this video. In this video, I want to show you what's happening here on the chart, the stock market, as I'm making this video. Very interesting situation here. And also, I want to talk to you a little bit about this particular chart that you're seeing here, and what this potentially could be teaching us about the market and also about how people think. Plus, also, I'm going to show you what's happening, what this particular chart was telling us as well. We'll talk about this as well. Before I do that though, first of all, I want to just bring your attention to this. I recently gave an interview to Forbes Online.
Well, aren't you special?
Yeah, exactly. And Forbes was very kind enough to ask for my opinion, and I essentially shared my thoughts with Forbes and everybody out there on the stock markets and also on Bitcoin. You can go ahead and read this article, by the way, on that short link right there. You can see on leadingtrader.com/Luke. The article was written by Luke Fitzpatrick, so I want to thank him for giving me the chance to share my thoughts with everybody out there. So the link to read this article is right there for you. Again, leadingtrader.com/Luke. So in this particular article, I want to share with you what I said. Here's part of what I said in that article. This actually is quite an interesting point I want to bring to your attention. So I said this, actually a quote from me. I said, unfortunately, most people have been on the wrong side of the market. They were bullish at the worst time, that was back in January, February. In fact, as you can see here, the greed, maximum greed was back in February and January, as you can see here, right before the crash that occurred in the stock market. Then bearish at the worst time. So bearish at the worst time, when was this? Back right here. This is when the majority of people out there, when the dumb money got out of the market. Now, in this video, I'm going to share with you who is the dumb money. You may be shocked by this answer. It's not what you probably think. So in this video, I'll go into more detail about who the dumb money is here and who were these people who were selling down here at the extreme fear point, okay, right when the virus situation was happening, everything else. And guys, look at this right here. Maximum greed, extreme optimism in the market. As you can see, that hit that greed section, a lot of greed and optimism right here very recently. And in this article, I also said, now greedy at the worst possible time in June of 2020, as you can see right here. As you can see also on my chart, greed in June of 2020, right before, let's go back to the charts. There it is. So as you can see here, guys, this is my chart, the S&P futures, and look at that. Today, as I'm making this video, we're down at least a couple of hundred points from the highs we made there. In fact, you may recall in my last video, in my previous video, I explained to you why I took profits in the market. I exited the majority of my position there last week when the markets hit 3,200 right there. Okay, so you can see we hit that resistance trend line. And as you probably saw in my previous video, I closed the majority of my positions for a net profit of about 91,000 pounds or about $115,000, you can see right there. So I think that was the right decision. I think that was the correct thing to do based on everything we had, you know, again, hitting resistance here last week at 3,200. Again, you may remember that in the previous video back in May, I said that this is going to be quite a risky area between 3,200 to 3,150. By the way, I have slightly updated this risk zone, as you'll probably find out later as well. All right, guys, so basically we've seen a retracement, so far a correction, what seems to be a drop and sell-off from hitting that trend line resistance right there. And we're not coming back down. It looks like a pullback to the averages by the looks of things. So you may be asking right now, well, could this mean we're topping here? Could this be the top in the market before we see a major sell-off in the stock market? Well, I would say right now it's a bit too early to call. I mean, guys, don't get me wrong here. Nothing would please me more than to say, yes, this is a top in the market. Yes, we're dropping now several hundred points down, you know, back down to the lows of, for example, April and May. But the fact is, guys, at the moment, it's still too early to call. Why? Because it's still in an uptrend. At the moment here, there's nothing yet to tell me that we've broken trend as yet. But the bottom line is that for me, yes, I'm loving what's happening here in the markets. I'm loving the fact that we're down here today. You can see after hitting just slightly above the 3,200 level there, we went slightly above it, and you can see that was a false breakout. It was a false breakout of resistance, essentially, and now dropping down what appears to be a drop down to the averages here on the stock market. Now, of course, it's possible by the time you're watching this video, you know, the situation may have changed slightly. Who knows? We might have bounced. There is a gap here on the chart, by the way, a gap down. So we'll have to see what happens to this gap on the charts here. Also, let me just bring your attention to this. So again, I asked earlier, who is the dumb money? All right, who were these people who were selling at the worst possible time, buying at the worst possible time, and again, buying at the worst possible time here, as you can see, extreme greed. Who were these people? Now, I originally thought that these people are just your mom and pop investor. That's what I believed some time ago. You know, your mom and pop average investor, the average Joe out there. Now, no offense to the mom and pop investors out there. Look, we love our mom and dads. I'm sure you love your mom and dad as well. But I'm going to show you today that the actual dumb money is not necessarily mom and pop investor. No. In fact, it's these guys. Okay, essentially it's the geniuses, the so-called geniuses in Wall Street. Take a look at this. I want to show you why I got bullish on the stock market back in late March. In fact, this is one of the reasons, not the only reason, it's one of the reasons. So you probably already know one of the reasons why I got bullish in the market, because we had extreme acceleration, as you can see here on this 2-day chart. As the market was dropping, we saw potential capitulation signals here. So market was crashing, and then I saw this extreme acceleration extreme here on the 2-day chart, the stock markets, with this extreme purple signal you're seeing here, showing potential capitulation, getting very close now on the markets. And that's more or less about the time when I got very bullish here on the market and looking for some kind of a reversal on the charts. In fact, here's a clip for you from back in March. Here it is.
The question is, what is probable, not so much what is possible. Is it possible markets can go lower? Yes, of course. But is it probable? I would say on the balance of probabilities, what we're seeing right now in the charts and what we've just looked at historically shows to us there's a higher probability on the balance of probabilities. There's a higher probability for us to see a bounce or at least a multi-week rally in the stock markets.
All right, so that's what I was saying back in March. But another reason why I was extremely bullish on the market back then was because of this. Take a look at this. I mentioned this back in our members video back in March and also in April as well, which is Wall Street downgrades. Guys, if there's any proof, any conclusive proof that Wall Street is the dumb money, that they're the herd, one of the biggest examples of the herd out there, this is it. As the markets were crashing in 2020, this year, in March of this year, take a look at this. Look at the downgrades. Downgrades hit extreme territory. Look at that. And you can see the virus situation here, and we came almost very close, almost extremely close to the same levels of the financial crisis of 2008, 2009. Notice something very similar, by the way. The more extreme the downgrades, the more Wall Street cuts down, the more Wall Street downgrades companies out there in earnings, the more likely it is we're bottoming. Look at that. The extreme pessimism, the extreme downgrades we saw in 2009 coincided with the lows and the bottom we saw in that year. And guys, remember this. Markets tend to bottom when there is the most terrible, terrifying bad news out there. A lot of people make the mistake of waiting for good news until the market bottoms. Wrong. That's actually incorrect. It's okay to be looking for reversal opportunities when the news is really bad. Okay, and this proves it right here. Wall Street was downgrading, and we were actually getting bullish on the market here. For obvious reasons, you can see the exact same situation here back in 2009 occurred in March of this year. Extreme bearishness, extreme pessimism with Wall Street downgrades, and that coincided with the rally and the reversal that we saw in the markets right here, as you can see there. So pretty much, you can see, let me just show you, the bottom here on the market was the 23rd of March, and those downgrades were actually occurring more about the same time. Now, here's something else I want to show you. Take a look at this. This is an article from MarketWatch, and they were saying back in 23rd of March. Look at this, guys. Look at the date on this article. 23rd of March, the day the market bottomed. Look at what the geniuses in Wall Street were saying back then. Wall Street money manager says the stock market won't hit bottom until investors throw in the towel, and we're not there yet. Okay. By the way, these guys are the so-called geniuses of Wall Street. Okay, people like this guy you're seeing here, Scott Minerd, that you're seeing here pictured in this chart. I mean, these guys you're seeing here, guys, all of these guys sitting here around this table, so-called geniuses. These are all highly educated, expensive education in Harvard, all these fancy universities, and yet they couldn't even figure out what's happening in the market. And essentially they were saying that we have not seen, look at this, we have not seen capitulation yet. Now, this was the opposite of what I was saying back in March. Back in March, I was saying, yes, we're getting very close to capitulation, if not already there, based on everything we're seeing on the charts. So there you go, guys. There's your Wall Street geniuses. And let me show you one more thing. A lot of folks out there are surprised when they learn this. Now, you may be surprised too. This is from an article that was published. Let me show you this. This is from an article published in Bloomberg Business Week some time ago, and they published something very interesting. The majority of hedge funds underperform the market. Here's the cover of that magazine right there. The hedge fund myth, as it says over here. In fact, a very funny looking front cover. as you can see right here. So everyone thinks, oh, hedge funds, these guys must be amazing. Yeah, fantastic. Look at this. Look at the, excuse the image here. I know it looks a bit quite rude, but that's not me publishing this. That's Bloomberg, Bloomberg Business Week, who's published this. So they're saying everyone thinks, oh, these guys are brilliant. These guys are amazing geniuses. But actually, the truth is, these guys underperform the market. Okay. In fact, you'd be better off. You'd be much better off doing buy and hold, just being in the market the whole time, than to go with these hedge funds. In fact, according to Bloomberg, here's what they said. They said that hedge funds have had years of uneven or poor performance during a long bull market, and so on and so on. So there it is, guys. I made this video because I don't think it's fair to be always tough on the mom and pop investor. I think mom and dad investors are perfectly okay, in my opinion. We love our mom and dads, don't we? So the bottom line is, look, I think it's these guys who are the biggest dumb money on the planet. The hedge funds, you know, all these institutional investors. Thanks very much indeed, guys. I'll see you guys in the next video update. Bye for now.